Welcome back, investors, to the Investing with Our YouTube channel for another portfolio update. Apologies, there wasn't a video last week, but I was away for the weekend. But as you can see, this week was a very brutal week, a particularly rough week, one of the worst I've seen in my portfolio for a very long time. Made worse by the fact that I have completed my ISA allowance, so I can't buy anything anymore without selling. So normally rough days where there's a lot of red is actually not a bad thing because you can buy stocks at a discount. So hopefully you were doing that. But in particular brutal weeks like this, where we ended the week before at 127,835 and we end this week at 123,944 for a 3% loss. But at its worst, we were down £9,000, which is a significant amount. And my advice again is, if you can, deploy more capital and buy these stocks that are going to go up. Eventually it's going to go up. As you saw at the end of the week, there was a bit of a resurgence. Doesn't mean that's over. Doesn't mean that next week there won't be more red. But if you are able to buy, do that. The other way to overcome it, which is what I did, is just to don't give yourself heartache. Don't look at the portfolio. And especially if it panics you, just close the app, do other things, get along with your life, and at some point the market will recover, which it has always done historically, always. Now, the week before, so the video I missed, we were at 129,466 and it went down to 127,835. So a particularly brutal period of time. And if you're not familiar, there's a thing called VIX. It stands for the volatility index, and it basically measures the volatility within the market. And they say you shouldn't time the market, but these are kind of like educated timings of the market. So the VIX, if you can buy above like 17 or 18, as you can see on Tuesday, it was 19.74. On Thursday, when it was particularly brutal, it was 22.9. If you can buy around 17 or 18, you're doing quite well. And these kind of situations occur all the time. If you look at a month earlier, there was a 20 on the 20th of January, there was a 21.77 on the 5th of February. And if you look at a year ago, it got to as high as about 52 during the Trump tariffs, which I was able to take advantage of because I still had money to deploy, as it was in April where the new ISA allowance is active. But as you can see, there's plenty of opportunities to buy at good prices. Now, conversely, if you're looking to sell something, try to sell at under 15.5. That means the market is actually green and there's less fear in the market and people are buying. So these are good times if you want to actually sell a stock or get out, then these are generally good times. But as you can see, plenty of opportunities to buy at good prices along the way. On the 1st of August, there was another 20. On the 16th of October, there was a 25, a 24 on the 18th of November, and so on and so on. So it sometimes makes sense to, wait for these little momentary pullbacks within the market, which always happen. It's just a normality of it. But what it does mean is sometimes it's hard to see when the VIX is high, when the whole market pulls back, is which stocks are going down just because of the VIX and the general market sentiment is down, or because the stock is not doing so well. And one particular stock, which actually the week before I got rid of, was HIMS. I just saw a better opportunity within the market, and that opportunity was Micron. Now, one of those days when the VIX was high, the market pulled back and I was able to get Micron at 430. Unfortunately, I wasn't able to get it at circa 330 when I wrote the article on my Substack, where Micron saw a huge insider buy, where one of the directors bought about $7 million worth of stock, which was particularly bullish. And since that time afterwards, as you can see, the stock soared up. And with the VIX being high, there was a big drawback within the market. So I am slightly down on the position, but I've got rid of HIMS and I've bought Micron. The price I got in at wasn't the greatest, which is 430. But I still have confidence that this stock will still continue to go up because there is a huge demand on memory for AI build out. And this is one of the bigger suppliers of memory in the market. It's in the top 3. So if you do follow my Substack, I wrote an article last week where it says memory remains in demand. And there was this article where Nintendo shares sink 10% as gaming giant faces memory shortage concerns. And there was a couple of quotes, including last month, a top semiconductor industry CEO told CNBC that the memory chip shortage was expected to persist through 2027. And also Serkan Toto, who is a CEO of a game consultancy called Kantan Games, says, if the current trend in the memory space continues, I would not be surprised at all to see Nintendo raising prices. So not good news for Nintendo, but good news for companies such as Micron, because the demand is still high. So this is a company that I'm bullish on, and I've replaced HIMS with it. HIMS, as you know from the weekly charts that I do, it has been struggling. A series of a lot of reds. I haven't been tracking it since I've sold it, but I just saw a better opportunity with Micron. Remember, when a stock is down and you don't have as much conviction on it, the market is volatile. So things and narratives can change. One of the reasons I bought HIMS in the first place was because of the deal it made with Novo Nordisk, which is the biggest pharma company in Europe. And I thought a partnership with Novo Nordisk would mean that other companies similar to that would partner up with them. But since then, there hasn't been any other. And to compound that and make it worse is that Novo Nordisk pulled back its partnership and it wasn't no longer working with HIMS. And I would have thought by now, since that time, they would have announced some similar kind of partnerships, but they haven't. And the management need to prove that they can execute well again, which they have done in the trajectory of the company. But right now, they're hitting a few stumbling blocks, and I've replaced it with Micron. So there you have it. Hopefully that one does well. Now, as you can see, with the market being down 3%, there's quite a lot of red, including a particularly bad week for crypto, such as Bitcoin and Ethereum, which both had terrible days. Bitcoin dropping as low as 60,000, which seems to be a support right now. So it has bounced back from there and currently just under 70,000. But that means stocks like IRN, BMNR had a particularly rough week. So hopefully that's behind us. If it's not, that's fine. We just carry on. Buy if you can. But there were some good, decent wins. For example, Carnival Cruise Lines has been a solid performer, continues to be solid, and had a almost 12% rise last week, mainly because one of its competitors, Royal Caribbean, had some good results, and that has pushed up Carnival Cruises. Now, if we look back at the portfolio, Trading 212 has this year-to-date tab now, which is quite good, so you can see how you're doing since the beginning of the year. And as you can see, it's been pretty brutal, but there has been a bit of a recovery at the end. We shall see if that lasts. I'm not so confident, but it is the nature of the market itself. Now, if we look at the overall portfolio, Google still remains my biggest holding, and we are up just under 85%. There was a bit of pullback where, although Google had fantastic earnings, they did guide that their CapEx, which is their capital expenditure, which is what they're going to be spending next year, was a huge number at almost $200 billion that they're going to be spending, which the market reacted a little bit negatively to. But Google has previously shown that when it does spend CapEx, it does result in actually revenue creation, which is ultimately what you're looking for. So it's still a position I'm bullish on. Meta, up just over 7%, also had good earnings, but again, guided for big CapEx spend. So that is something that has pushed Meta down a little bit. And usually my third biggest position is with Robinhood, but Robinhood had a particularly tough time because it's so pegged to how Bitcoin does. Bitcoin has had a rough time, so you saw Robinhood falling to negative where it was positive before. So Imperial Brands has become my third biggest holding, and we're up 85%. But the big star performer is Carnival Cruise Lines, which is up over 133% for almost 4.5k gain, which is huge considering my holding cost me £3,300. So really good performance from Carnival there. Visa and MasterCard are okay weeks, and are roughly 6.5k worth of holdings for each of them. Nvidia is still doing well and went up at the end of last week when some of these companies said they were going to be spending more capex, and usually Nvidia is one of the companies that gets some of this spend. Amazon, another company that's guiding for big spend. Now, most of the rest of the companies have had rough weeks, but I'm still up on all the positions such as Tesla, Broadcom, Microsoft having a particularly hard time. But this company now, at this kind of pricing, if we look at where it was in its height in October at 550 down to 403. So this becomes a decent solid buy now. If you look at the P ratio, it's around 25, which is a good price for a company as solid as Microsoft. So this becomes similar to Google last year, where I bought it under 20 PE. This one will recover again, and this becomes a good price for this company. Similarly, Amazon under 30 PE is also a good buy. Many people are saying that this year is going to be Amazon's year, where it does coil up and goes on a bit of a run. And I tend to agree with that. I think it will have a decent year. The two healthcare insurance providers having a bit of a tough time, but again, we wait it out. IRN, especially with the volatility of Bitcoin, had a particularly rough week, but I'm okay with holding this company. The rest of the positions I'm quite happy with. We are down on some of them, but it's just a case of waiting until they recover. My new purchase, Micron, is down a little bit, but again, as we saw earlier, there's still going to be huge demand for memory, and this company would do well off the back of that. Apple actually had a decent week, up just under 7%. So this is one in this time of volatility. It's holding up quite well. BMNR, now this is struggling badly, but that's because Ethereum is down. There's still many companies utilizing Ethereum for its blockchain projects, so this one will recover. I'm confident of that. And the last two, ASML and KLA, have been doing very well recently. So that's it. That's the overall summary of the portfolio. Thank you for joining me on this one. And if you like the visibility and the transparency, then please give this video a quick like and subscribe to follow my journey. And I'll see you on the next one.